Hi everyone, welcome to our answers walkthroughs. This is question number 2 from the worksheet which we started during our Thursday live session. Question number 1 we had already done, we did it together, and question 2 had been given to you as a home assignment. And once you submit the assignment and the deadline is over, you can compare your answers with this answer walkthrough and self-assess your answers. So let's get on with it. For all accounting questions, I would suggest that you try to develop a storyline in the beginning and make yourself the main character of the story. Like in this question, Paul is a trader, so you are Paul. So imagine yourself to be Paul, and then you can see like what are the other characters in that story, and see the timeline of the story. So you are Paul, and this is your business and transactions for the month of April. So on 1st of April, 4 balances are given. So if we can circle the 4 balances, these are all the opening balances. So we can just make a notation, these are opening balances for the month of April. So these are your opening balances. And it's good to remind you at this time that they are taken from a trial balance. So a trial balance must have been done in the month of March. So this is part of the trial balance. So it's not obviously all the balances, it's just the 4 balances given. So just let's go through those balances one by one. Cash is given, so that's the opening cash in hand. Then bank overdraft, so you are owing to the bank 2190. And then there are 2 personal accounts. One is Malui, who is a credit customer, so let's make a notation, TR. So Malui is your TR. Bear with us. So Malui is your TR, and the next person is the T Nikundi. This one is a TP, the trade payable. So 4 balances: cash, bank overdraft, trade receivable, and trade payable. And then transactions are given. So again, don't forget the storyline. You are Paul, your business for the month of April, opening balances are given, and then transactions for the month of April are given. And also mind you, not all the transactions may end up in cash book, so you have to read very carefully. Some of the transactions may not go in cash book, but you should know where they go. They will go to other books of accounts, and we'll make notations for that also. And a transaction not going in the cash book may still end up in a trade receivable account or a trade payable account, which you will notice as we go on. So let's get on with the transactions. April 2nd, sold goods on credit. So let's highlight on credit. And when the goods are sold on credit, so this transaction on April 2, it is goods sold on credit. So this will not go in cash book because it is not involving cash, or it's not involving cash or checks coming in or going out. So there is no cash, no check, so it will not go in the cash book. But you should also know where will it go. So it's going to go in sales journal. So we will just make a notation on the side that this transaction will go in sales journal. We have done that already, and you know that all credit sales are recorded first listed in the sales journal. So this April 2 transaction, we have made a notation on the left that this goes in the sales journal, and it will go in Malui stores account also. So let me show you. We scroll down and show you the account. We'll scroll down and you see there is Malui's account. So this entry will be going in Malui's account also. So don't forget that this will go in his account, and it will go in the sales journal first, and then in Malui's account, and then in the sales account also. So it'll go up again. We carry on with the transactions. April 5th, we are paying 620 by check. So this is a payment. So again, first you decide which side of the cash book it goes. So it's a payment, will go on the credit side. Paid by check, so we'll go in the bank column, and then we'll read the rest of it. What did we pay it for? We paid for new office equipment. So 580 will go to the new office equipment account, and $40 will go to repairs account. So two different accounts are involved. So 620 has been broken down into 580 and 40. So actually this 580 plus 40 is the 620. So let's put it in the cash book on the credit side. Let's mark the year first in the date column. Let's go up again and check the year first. It is 2014 and month is April. So before that we should enter the balances. So let's enter the balances first, the opening balances of cash. So let's fill up the years first, 2014 in the date column on both sides. So on both sides we write 2014 in the date column, and then we write April on both sides. On the other side also we'll write April, and first enter the opening balances. So April 1, balance brought down for cash. So balance brought down. So let's see how much cash we have. We go up and check cash, and how much was that? $75. And then the bank is overdraft, so overdraft will go on the credit side. So we'll enter balance brought down on April 1, balance brought down, and that's your bank overdraft to start with, which is 2190. So these are the opening balances. Then April 5th transaction on the credit side, so just write 5 there. So April 5th, and two accounts were involved, so office equipment, and in the next line we would write repairs. So office equipment, that's one account, and the other account is repairs. One is a non-current asset, one is an expense, so do not combine them. It has to be recorded separately in the bank column. So let's go up and see the amounts again. Office equipment was 580 and repairs is 40. So 580 and 40 in the bank column. So 580 for office equipment and 40 for the repairs. Let's go up, see the next transaction. On 13th, purchase goods on credit. So let's highlight purchased goods on credit. Oh, no, I missed one. On 8th, we received a check from Malui in settlement of their account. Now let's circle settlement of account, settlement of their account, and let's show a working beside it how much this guy owes you. You remember he's a TR, so let's go up first and see. He was owing you $50. Can we hover beside that $50? This is the $50 he was owing you, and then on 2nd of April you sold him more goods, 34. So he owes you $84. So let's show this, 50 plus 34. This is what he owes you. So 84, and now you are receiving a check of 84 from him. So we'll go in the cash book. You are receiving a check, so it will go on the debit side of the cash book. So on 8th of April, Malui stores, and you have got a check from them which is $84. So bank increases by 84. Another thing to note here is when you get a check from someone, you immediately record it in the bank column on the debit side, believing that you will collect the money. But at times it happens that the customer may not have money in his account, or something else could happen. Maybe the signatures don't match with the bank's records. So sometimes this check may not be collected, which is the case in this question also, you will notice later. And this check may need to be cancelled, and this kind of a check is called a dishonored check, And you know about such checks when you get the statement from your bank. The banks will send you your statements periodically, and you'd be able to see that which checks you have deposited and which checks have been collected, and the checks which have been dishonored, which means they now need to be cancelled, So keep in mind that the checks that you receive may need to be cancelled, and we'll see how. So let's go up again. On 13th, you are purchasing goods on credit. So let's highlight purchased goods on credit. Now this will also not end up in cash book because there is no cash, there is no check, and this transaction will make a notation on the left like we did for April 2nd transaction. This will go in your purchases journal. So this transaction will end up in your purchases journal. And again, reminding you, there are 4 journals for the goods bought and sold on credit, and then there are returns also, so sales journal, purchase journal, sales returns journal, and purchase returns journal. Those are the 4 journals which are needed for the goods. So this transaction again will end up in purchases journal. And how much will be the amount? Let's calculate the amount because we will need that amount later. 260 is the list price. If you remember, the list price is the price before discount and the trade discount of 20%. So we'll multiply this with 80% to know the price after the discount. So let's see how much is it. Yeah, so 208. So this 208 is the price after the trade discount, and this is the amount which will appear on the invoice which you would receive from Nikundi. So 208 is what you need to pay to him or her. Okay, so but we calculated it, but we're not going to enter it in the cash book. We'll see when we enter that. We'll come back to that. Then 17th again is a transaction which will not be entered in the cash book because you see there is no cash involved, there is no check. So if you read the transaction, you don't see any cash or check. So if there is no cash, there is no check, it will not go in cash book. So here you are returning goods to your trade payable. So this would end up in purchases returns journal. So we will highlight the transaction. So let's highlight returned goods. Okay, and this transaction will end up in purchases returns journal. So we'll make a notation here, purchases returns journal. So this is the original entry for transaction on 17th of April. But let's do a calculation again here because this calculation we would need when we do this trade payables account. This $80 of list price, can we circle the list price? Again, this is your list price, the whole thing, list price of $80. Let's circle the whole thing. This has to be changed to the price after discount. So let's again multiply it with 80%. So 80% of 80 is 64. So this is the, so goods were purchased on at discount, so they'll be given back also at a discount. Again, we'll not enter it in the cash book, but we will need it when we do this trade payables account after we have done the cash book. The next one, 21st, the bank dishonored the check received. Now if you remember, I mentioned on April 8th that some of the checks may be dishonored, and that's what's happening here. So you have to read these 2 transactions together, so 8 and 21, just read them, that the check which was received on 8, which was $84, we showed the calculation for that 84, this check is now dishonored, which means this guy, Malui Stores, they didn't have money in their account, so their check was dishonored, so this check has to be now cancelled from the cash book. So let's go down, and you see the check, when we received the check we had recorded it on the debit side, and now we're going to cancel it by putting it on the credit side, so as if you didn't get the money. So we just remove this $84 by putting it on the, so this happened on 21st, and again we'll write the name of the culprit. So he's the bad guy, he didn't pay you your money. Dishonored check, we'll write in the bracket dishonored check. No need to write it, just for your own purpose we are making this notation here, but let's not go into amount columns. Bear with us for a second. Let's not go into discount received column because we have to make notations only in the details column. So we can just write DIS and CH. So this check, so this is your dishonored check, and $84 in the bank column. So now you can see $84 on the debit and 84 on the credit, so this is cancelled as if you didn't get the money. So this guy still owes you $84. Okay, he pays it or not, we don't know. We'll see. Then on 24th, we are paying a check to our trade payable for the amount due, but be careful that amount not due up to 21st of April, but only up to 1st of April. So we'll go up and see how much we were owing to him on 1st of April. It's 320. So we are paying him this, but after deducting a discount. So let's show a calculation. So we'll not pay him 100% of 320, we'll pay him only 97.5%. So we'll calculate 97.5% of 320. Bear with us, we're doing it on calculator. So 312. So we will pay him 312 out of the 320, and the second calculation will be for the discount received, which is 320 minus 12. So let's show another calculation beside this. For the discount, 320 minus the 12. 320 minus the 312. So $8 of discount received. So we're gonna pay him 312, and we will get this discount received in there. Okay, so let's enter it on the credit side of the cash book. So we paid a check to T Nikundi. So we are making a payment on 24th to our trade payable T Nikundi. Okay, and we are paying 312 by check, and we are receiving a discount of $8. So this makes it 320, which you are owing him on 1st of April. Okay, let's go up again and see the next transaction on 28th. It's cash sales, simple transaction. You sold goods, so your cash is increasing, so you're receiving cash. So we'll go to the debit side of the cash book. In the cash column, 2,500. So sales is the details. So you made sales and you got cash, 2,500. Next one is you are withdrawing cash for your personal use. So let's circle personal use and make a notation, drawings. Whenever it is personal use, it is drawings. And again, a reminder, drawings is not a counter entry. It only appears on the credit side of the cash book. So this is your drawings. And you have drawn the cash for your personal use on 29th. So on 29th, on the credit side, we'll put drawings in the details. And it was cash. So how much was the cash? You can go up and confirm again and put the amount in the cash column on the credit side. Go up and see the next transaction. On 30th, wrote off. So let's circle this word wrote off. This is called a bad debt. So let's make a notation. Wrote off means a bad debt here. So if you remember, this guy was owing you some money, and then he gave you a check. To be precise, $84. On 8th, you received a check from him, and then this check was dishonored on 21st, and then you might have tried to get your money, but now you are sure that you won't get it. And once you are confirmed that you won't get it, then you will write it off. And writing off is basically losing the money. So let's make a notation here beside bad debts that it's a loss. So you have lost your money. So it will end up as an expense. We'll see where it ends up when we do income statement. So you lost your money, so you're not gonna get it. So this will go as an expense. And expenses have debit balances, and we'll see how it works. So again, there is no amount here, but the amount owing, can we highlight amount owing and write beside that $84? So we know that the amount owing was $84. So we just put the amount here, $84. So this is what this guy was owing. Another thing to note, do not record it as a bad debt when the check was dishonored in the first place. You remember the check was dishonored on 21st, but there we did not record it as a bad debt. We waited for some time longer, and then we decided to write it off. So which means you have to sort of exhaust all your efforts before you record something as a bad debt. So you do your best, and if you still don't get it, and if there is no chance and there is no hope of getting the money, then you write it off as a bad debt which you did on 30th. Again, this will not go in cash book. It will go in Maloui's account, but it won't go in the cash book, and it will go in another journal also, which we haven't done. But let's make a notation. This transaction will go on the left. We'll make a notation. It will go in the general journal. We haven't done that yet, but we will after we do one more topic, which is the petty cash book, and then we'll do the general journal. So this transaction will end up in a journal called general journal, and then it will go to Maloui's account also, but it won't go in cash book. Okay, the next transaction on the same day is paid all the cash into the bank except 60. This is similar to what came in question 1. So let's first make a calculation of how much cash we still have. So let's make a working here. We started off with cash. How much? Can we go up and see how much cash we had? 75. And we can look up in the cash book down also. 75 and 2,500. And on the other side there is $300 of cash. So the cash we have is 75 plus 2,500 minus the 300. So we have 2275. But out of this 2275, we just want to keep 60 with us, so we'll minus 60 from this, and 2215 will be deposited in the bank. So let's show a calculation here. We started off with 75, plus we made the cash sales of 2500, and minus from it the drawings, and minus from it the 60 that we want to keep, and we will deposit the rest of the money, which is 2215. So this 2215 in the bracket we'll write here deposited. So this will be deposited into the bank, and this is a counter entry, so we're going to deposit this into the bank account. So that makes, so let's make a notation also of a counter entry, that this is a this one is a counter entry, because you are moving your cash in hand into bank. So this is your counter entry, which is going to increase your bank and decrease your cash. So let's make an entry for that. Just bear with us for a second. Yeah, so we'll decrease our cash by, so on 30th we'll record bank and write a small c with it, and we will, in the cash column, we'll put the amount 2215. So this 2215 will go on the other side in the bank column. So on 30th, detail would be cash, and again a small c beside it to show it's a counter entry, and bank increases by 2215. So we will just change the color of this to show you that it's a counter entry. So let's make it a different color so that can pop out. So what we have done here is we have just changed the color for the transaction on 30th to show you that this is an unusual transaction, which you always keep a note, which appears on both sides, and it's a counter entry. You are moving your cash in hand into bank, but not all of it. You are keeping 60. So when you are keeping 60 with you at the end of the month, it automatically means that 60 is your balance carried down. So you can, because you know now, right, I mean you already know that 60 is with you, so you can enter it as, so let's enter it as balance carried down. So on 30th of April, balance carried down. Even without calculating, you should know that it is 60 in the cash column. And you can confirm it by adding the numbers now in the cash column. So let's confirm it, that on both sides the cash should be 2575 now. So we can write the totals just to double check. So let's write the total in the cash column on both sides. So cash is adding up to directly, we can write the totals now. So cash is adding up, leave a box blank, go down and just enter here the total, and on the other side we'll also enter the total, and we'll make it a little bigger to just sort of, so that it pops out at you that this is the total. So we'll increase the font size here a bit, and we just enter it as total. Just bear with us for a while. Okay, so you can see the cash column is adding up to 2575 on both sides. And this 60 you can work out as a balance in a usual way also by adding 75 and 2500 and then subtracting 300 and 2215, you would get 60. Now let's check the bank. Remember, with bank there are possibilities that you may have a credit balance, so always check the totals. So let's check the total on the bank on the debit side and just pencil it in on the top of the bank column. So the bank is adding up to 2299 so far, and on the other side, just bear with us, we are calculating. On the credit side it is adding up to 3206. So if you notice, there is again a bank overdraft because the payment is bigger than what you got into the bank. So money going out of the bank is 3206 and the money coming into the bank is 2299. So you are ending up with an overdraft of 907. So this will be entered as balance carried down. So for the bank we will enter the balance now. The balance carried down in the bank column is 907, and now we can add up the totals. So the bank column on both sides should add up to 3206. So 3206. Just bear with us for a second. So 3206. Can we make the balance CD smaller as font 12? Okay, so we ended up balancing the bank column also. So bank has an overdraft of 907. Now these balances CDs should be brought down next month, so on May 1st. So we'll bring down the balances on May 1st. So cash balance is, so balance brought down for the cash is 60. And the balance brought down for the bank is 907. Just bear with us for a second. So balance brought down in bank is 907. Okay. And for the discount columns, we'll just put the totals. So if you see the discount, there is no discount allowed. So we'll put a 0 there if you want to. Or you can just leave it blank also, and there is a discount received of $8. So this finishes our cash book. So it was pretty challenging, this question. Some of the questions have adjustments which are targeted at A or A star level of grading. So this was one of the questions that some of the adjustments were targeted at A or A star level of grades, you know. So let's carry on with the rest of the question after we finish the trial balance. After we finish the cash book, we need to do these two accounts, the TRs and TP account. So if you remember, Mului was your TR. So we'll again make a notation. So this is your TR, and the other one is your TP. So just to remind you about the balances, you know. So for TR you will think about as an asset account so that you know the rules, and for TP it's a liability. So we'll record the opening balances first. We'll go up again to see the balances in the question. On April 1, Malui's balance is 50. So let's finish Malui's account first. $50 as balance brought down. So 2014, April 1, balance brought down $50. So this is the amount this guy was owing you when the month started. Then we go up again and we'll see we did a transaction with them on 2nd of April. So you see the 2nd of April, we sold goods on credit to this store, $34. Remember, we didn't enter it in the cash book, but we will enter it in Malui's account on the debit side. So we'll go down and we will enter this on April 2nd. So sales, $34. and this makes this store owe us $84, you know. And they sent us a check. We'll go up and see again. When did you receive? Now you can see this transaction where you got a check, you know, on 8th. So you on 8th you got a check. We'll see it in the cash book also, how we had recorded it in the cash book on 8th. You see on 8th we debit the cash book, so the double entry will be credit Mului. So on Mului's account on the credit side, 2014, April 8th, we got a check. So bank, in the details, do bank, and $84. So far so good. It looks like you got your money, but you will be in for a shock on 21st when you know that he didn't have money and the check was dishonored. So let's go to that date, 21st. You knew that this guy will never pay you, right? And then you waited and you went on, and on 30th you decided that you're gonna write this off as a bad debt, as I said. So let's close Mului's account by entering bad debts. We haven't done that yet. This is something new, but we'll do it now. So April 30th. So on 30th we decided. So on 30th we'll write. On 30th we'll write here bad debts on the credit side. $84. We have made a mistake here. You should have noticed that we forgot to do the dishonoring of the check first. So 21st, and then we will do it. So let's delete this first. Let's delete this because we have to enter first the dishonor entry. So we'll just remove this. Okay. So let's do the 21st. What happened on 21st? The check was dishonored, you know. Okay, so this let's check it in the cash book. How we recorded it in the cash book? On the credit side. So in Mului's account we'll make a debit entry now. So on 21st we'll write bank here again, and in the bracket we'll say dishonored check 84. So the check is dishonored. Okay, and then you waited for more time, and on April 30th you decided that this guy will never pay us. So we close his account by writing bad debts there. And this is a new account which will be opened in the general ledger. Normally you would have written balance CD, but this balance CD has become now a bad debt, you know, because you will never get it. So now we can add the totals on both sides. So we can just see both sides are adding up to 168, right? So we'll just 168 on both sides. There is no balance in this account because you have already recorded the balance as a bad debt. So this finishes Mului's account. Let's check the other guy who is a trade payable, and we were owing him 320. So that's the balance BD. So a trade payable account starts on the credit side. So on credit side, 2014, April 1, balance BD. So we were owing this guy $320. Okay, now let's go check in the transactions. Read his name and see what other transactions we did with them. On 13th we purchased more goods from this guy, and we have already done a calculation. Now you see why we did this calculation, because we're going to record 208 in his account. So purchases. So on the credit side we made more purchases from this guy. So purchases here. We'll confirm the date. We'll go up again and we'll see. So on 13th we made more purchases, and we would write 208. This is the price after the discount. Okay, and you see we didn't look for the double entry in the cash book because this was not recorded in the cash book. This had gone in purchases journal. We'll go up again and see the next transaction with this guy. We'll just see. We are returning goods to him. and the amount we have already calculated 64. So we'll record on the debit side purchases returns. So 2014. Purchases returns. We'll just confirm the amount again. It was 64 probably. Just let's double check it. Yeah, it is 64. So we are returning goods to the trade payable 64. Again, we did not check in the cash book because there is no entry in the cash book for that. It had gone in purchases returns journal. Then we paid this trade payable an amount of 312. We have already calculated it, and we received an $8 of discount, and this we can look up from the cash book. There is a transaction in the cash book, and you can make a double entry. In the cash book you see there is credit entries, and in the trade payables account will make the debit entries. So let's enter this 312 and 8. So 312 and 8. So bank 312 and discount received $8. So you are paying your trade payable but receiving a discount of $8. And if you notice this, no need to write that again because we know that it's the same transaction. So we can circle that 312 and 8 just to, and circle the 320 on the other side just to show you that this cancels that 320. So you were owing this guy 320 and now you have paid him 312 and got a discount of $8. Which means now you need to pay him only for the purchases on 13 minus the purchases returns on 17. So let's check up if there is any more transactions with this guy. There aren't any. That's it. So let's balance this guy's account now. And the balance you can do it in usual way, 320 plus 208 and minus the 64, 312 and 8. Okay, this is the longer way, and the easier way would be the purchases on 13th and purchases return on 17th, and you are left with 144. So the balance carried down in this guy's account is, so on 30th of April you still owe this guy $144. So balance CD for this guy is 144. Now we'll get the total on both sides, which is 528. So both sides add up to 528. And let's add one more row for the balance brought down because there is a balance brought down, but our account has, so just bear with us. We'll add one more row here, or we'll just bring a balance down. You should know May 1 balance brought down. Always bring the balance down. So 144. So you owe this guy 144. All right, so that does it. So this was, as I said, a challenging question. The cash book had some challenging entries, and then there are two accounts which are required here. What else could be asked in this? Can we go up, scroll up and see what else they can ask you? They can tell you to do a discount received account. They can tell you to do in the cash book. All other accounts can also be done. If we scroll down and see the cash book, they may tell you to do office equipment account, repairs account, and sales account for that matter, or the drawings account, and all those accounts can be done just as normal T accounts, and the double entries can be looked up from the cash book, but they just asked you to do one trade payable and one trade receivable account. So that does it for the moment. We'll just erase the totals which we wrote at the top for the bank column. They were just penciling in the numbers just for you to. And by now, I think you shouldn't do that. You already know how to do the balancing. So we'll just erase it. And that sums it up, and this finishes the screencast. Hope it helps you. Thank you. Bye.